Today is June 1st, 2021. What I was thinking about this morning was these past couple of months have been, health-wise, as I wrote and I tweeted about a little bit this weekend too, have been difficult for me and then my wife and, my family ultimately as well. And, of course I have a cold now, but as I start to feel better, and I kind of talked about this a few weeks ago before my wife had gotten sick. I'm confident, I'm carefree, I'm fearless, I'm focused, I'm ready to go. I'm ready to get back into the swing of things with trading, and it's important because I need to go through my morning checklist. I need to go through my morning routine in order to determine if I am those things, so that I can help make a really good decision as to whether or not I should increase my size, decrease my size, or just not trade. And there's another variable in there too, is do I take a trade with smaller size or a couple of trades, but limit my round turns? So we talk about the fine line between traders that consistently lose money, traders that are breaking even consistently, and also traders that are consistently profitable. And there really is a very fine line that separates traders that are taking money out of their accounts consistently and traders putting money into their accounts consistently. Not a lot that separates. That fine line is very subtle, and the nuances are very difficult to understand, and it requires a lot of experience and some time in the markets and some time in trading. So I think it has more to do with not more information or more knowledge, not more market knowledge or market information. That could be crippling. That could be confusing. I hear traders always talking about confluence. I don't understand what that means. I don't need to look at 6 or 7 or 4 or 5 different studies or different moving averages and MACD things, seeing when they align. It's too confusing to me. I need to keep things simple. I need to keep things repeatable. And I think that fine line that we all have to cross, or we have to understand the subtleties and the nuances and then put into context, is how we size up, how we size down, and how we decide not to trade. And also that extra little variable is if I'm not exactly sure how I am, then I'm going to just take a few trades, but limit my round turns. And if I do not find the momentum of the market quickly and easily, then that's it. I'm gonna sit myself on the bench, but I'm gonna spend the time in front of the screens. Even if I'm not going to trade during this time, and I'm speaking for me now, while I'm kind of easing my way back into my rhythm and into my flow for trading, I also have to be mindful not only of my size, but my round turn. So if I put myself on the bench, I need to spend the time in front of the screens. Something we haven't really mentioned a whole lot, and I thought about that this morning, was if your computer screens are in your bedroom, when you walk inside of that room, you walk through that threshold, whatever is going on peripherally in your life no longer matters. It becomes your office. That's it. So everything going on in your personal life, everything going on in your life ultimately doesn't matter. Your bias, your market bias, your, arguing with your boyfriend, girlfriend, wife, partner, husband, whatever, your dog, it doesn't, whatever it is, it doesn't matter. Ultimately, you have to leave it at the threshold of your office, and you have to develop a good routine, a good solid morning rituals and routines that become habits that will help you keep all of that stuff at the threshold of your office. On the trading floor, I had to walk through a turnstile. There was action I had to take. I tweeted about that this weekend, was, the action of trading. But when I walked onto that turnstile, no matter what was going on in my life, when my marriage was falling apart, my first marriage was getting more and more difficult and falling apart, worrying about my children, worry about whatever it is, whatever I was worrying about, I left at that threshold. I left it right there at that turnstile. So when I walked onto the floor, I felt that energy. I felt the energy of the markets. I felt the energy of everything going on around me, and that's all that matters. We talk about this every day, just in different ways. Every morning, I remind everybody to breathe. Remember that. Breathe. Slow your heart rate down. Slow your mind down so that we come before the markets with a relaxed mind, a relaxed soul, a relaxed heart. Everything that becomes relaxed, and we can put our blinders on now, like racehorses do, and push out all of the noise. Excuse me. We can push all of the noise away, all of the noise going on in our hearts, our minds, our soul, and our lives, and focus only on the price action, not our biases, not our market bias or our opinion or thesis, but strictly and utterly on the price action as it is. Things become very, very simple, whether you're a new trader, somebody who's learning how to trade, or somebody who's been trading for 30 years. Right now, at 8:19 Central Time, we are all in the same boat. It doesn't matter if you're Paul Tudor Jones, if you're Tudor Jones, or if you're Richard Dennis, or me, or the newest trader in here. It doesn't matter. We are all in the same boat. The only trade that we have is that next one. The only trade that we have to focus on is that next one. And so we relax our minds, we relax our hearts. We do that by breathing. We put our blinders on and shut out all of the noise, and we walk through the threshold of our office. And again, whether that's in the dining room of your home, or an actual office setup like I have in my home, or it's in your bedroom if you live in a studio apartment. When you walk through that threshold, you are no longer in your house or in your bedroom. You are at work, and that's your office, and that separation needs to exist. When you sit down in front of the trading screens with the intent to trade, those blinders need to go on. And now we just focus on what we have in front of us, and that's all. And things become very simple. Now, talking about simple, right? It's always a good thing to. Well, let me back up and say, we work. I talk about this a lot too. As traders, we all need to learn what the difference is between a wiggle, between noise, and between an actual move in the market. Right now, with these smaller, tighter ranges, we might not have a lot of noise. It's easier to differentiate between the noise and the move, right? Because we have targets, we have price points. We know according to our plan anyway what the difference is. Now the issue is a wiggle. Too many of us might be looking for 1 or 2 point or 3 point scalp here and there. And I'm not looking to do that. We all need to learn the difference between the market noise, a little wiggle in the market, and also a move. And we determine that by our plan. But something that I had mentioned in our note this morning is we as traders also, and this goes hand in hand, I think, with learning how to differentiate between a move and the noise of the market, is we as traders also need to, how do I put this? We as traders also need to meet the energy of the market in equal measure. Well, we need to, the energy that we spend, that's it. The energy that we spend in finding the momentum of the market needs to be in equal measure to the energy that the market is providing us. The way that again, let me say that again. So the energy that we are spending needs to, in trading, and again, spending is a term that I use purposefully, I mean, the energy that we spend in the market needs to be in equal measure to the energy that the market is providing us. And so what I mean specifically by that is that if the market comes out, if we have in our opening range is 1.5 points wide, and we're sitting there trading around the opening print and can't get a breakout, I'm not upping my size, and I'm not going to start trading and flipping every uptick out of the opening range and every downtick out of the opening range. I'm going to wait for something to develop. I'm going to wait for the market to set up. And if we're still trading very quietly in a very tight range, I am going to cut my size, and I'm going to decrease my round turns. These are not markets to be aggressive in. There's going to be a time and a place where we see that, that kind of energy, and where we meet it with increased energy, where we're willing to take more attempts, where we're willing to increase our size, where we're willing to look at these targets and the momentum of the market and decide this is a target that I'm taking profit at, and when we get under, this is a target that I'm going to initiate another unit on and keep my risk the same. Because again, remember, it is very possible to learn how to increase your size without increasing, or at least significantly increasing, your risk. Given the fact that past results are not indicative of future, past results are not indicative of future results, is also the reason why it is best to not be too aggressive in learning how to do these things. Give the market your time, not your money. Give the market your time, not your money. If you want to learn how to increase your size without increasing your risk, do so on the simulator. If you're an e-mini trader, if you're trading the mini S&P, maybe try it either on the simulator or maybe try it small in the micro. But don't, if you've got a $5,000 account, don't go banging out, whatever it is that you can lever up to with the intraday margins. Please take it easy. Because again, remember, we don't take positions home unless we've earned enough in that position to be able to cover the overnight margin, as a guideline anyway, right? We do not take positions home. We do not take runners home unless we have earned enough to be able to, in that trade, unless we've been able to earn enough in that trade to be able to cover the margin. So real quick, let's talk about some targets. If we open up here in the S&P at 42.25, we're going to, well, we have our first price point at 42.28 to 30. And then our first target is going to be 42.35 to 37. 42.5 to 52 is going to be the upside target. Okay, it's going to be an upside draw. That is a monthly target and a weekly target coming together in that area. I massaged it down. It could have been 42.5 to 54. If there is increased momentum to the upside, obviously I'm going to, because of time constraints, I just had to get the plan out this morning. I was running a little bit late. I'll update all of our targets, and they'll be listed in the trade plan tab above the text channels in Discord. Similarly, on the downside, we've got to get price below 42, below this price point here on our plan, 42.18 to 20, to target down to 42.11 to 13. That becomes a big target based off of the low last week, and it's also a weekly, monthly target as well. Price action below 42.04 to 06. We should all know this. These price points and targets down to 41.98 to 42 even. So remember, we also trade in unit sizes, and I'm all in, but I scale out. And that way, it's me learning how to let the market tell me what to do and how I'm doing it. Okay. So also Nasdaq has got a little bit less momentum to the upside. Well, a lot less momentum to the upside on the whole. And so I tightened up our targets. I had a hard time actually targeting out the Nasdaq this morning because we've got some monthly stuff coming in at 13,870, but we have those bigger quarterly targets at 13,900. Long before 13,906 was our long before 13,900 was the old all-time high. 13,906 has been a big quarterly target for us, and it's going to remain so. The market has memory. Remember that. The market has memory. Okay, the market remembers certain price points and, well, certain targets anyway. And the market is always going to kind of magnetically draw to those targets. In the bonds, the big target in the bonds on the downside is going to be 155.05 in the 30-year bonds, 155.05. The fact that we're back under this 156 area means that we're headed down there to me. And if we get down there, I will be taking a long. I'm not short bonds, but I will be looking to initiate a long down there the first time. And if we get under 155.05, I'll take a long there. We get under it, I'm short. Okay, that's a huge area for us. All right, everybody, have a wonderful day. I'll see you in live trade. Trade well, live well, slow your heart rates down, breathe in and out. We have about 40 seconds before we open. Relax everything, and I'll see you in a sec.